Okay, thanks for joining me again for my monthly webinar for FX Street. I'm going to start with dollar index, but as you know, please always feel free to shout out a market that you'd like me to look at, and I'll certainly do my best. I'm covering more markets these days anyway. I think I must be covering about 35 markets or something, so I'm a bit more familiar with some of them. Right, dollar index. I'm showing you this for a good reason. I don't know if you saw my article yesterday. I wrote an article and stuck it on my website. Also, it was for Intertrader originally, Intertrader broker. So dollar index caught my eye. This chart goes back to 2011, the beginning of 2011. You can see a nice clear channel there between these two trend lines. The upper channel, of course, is now being tested. So you have to wonder, with the market having had such a good run since May of this year. Well, in fact, it's been in a bull trend since the second quarter of 2011. So good 3.5 years or something like that. Yeah, this most recent very powerful leg up since May of this year. I do believe that's May, if I remember correctly. Yep, second week of May has been very powerful indeed. It's been a really good run up, and we've just absolutely perfectly touched this trend line and come to a grinding halt last week. This week we're heading back up to retest it by the looks of things. So we've got a high last week of 88.19. You can see, I mean, that trend line is, if you want the exact price, is it not showing it? No. Anyway, you can see that. You can stick it on your own chart. But we've retested it. So we've got to watch that last week's high at 88.19. See if we retest that. We're within 20 pips of that now, I think, as I speak. And are we going to get a little double top there on the weekly chart to confirm a short-term top at that trend line? You've got to keep your eyes peeled for some sort of confirmation that that is a short-term peak, and we could drift lower. I don't really think we're going to collapse. I don't really think we're going to test this lower trend line, certainly not for a long time. That isn't in the near future, but I wouldn't be at all surprised to see at least a leveling off below this trend line now. We have got very overbought, quite overbought in the weekly chart. I'm going to carefully... we're looking at dollar index. Dollar index. DXY. That was the weekly chart of the dollar index. I'm going to try and slide over to the there we go, to the daily chart. Just a hint there of some negativity from this candle. I think that was Thursday's candle, or was it Friday's candle, where we just made that new high, just peaked a little bit above the previous day's high of 88.14.5. We got to 88.19 and then closed lower. So, I'm terrible with names of candle formations, but I know what they all mean. And that one certainly is less positive, shall we say. It's definitely not a sell signal. But you couple that with the fact that we've hit that very important trend line, absolutely kissed it, bang on. And you have to sort of wonder now, is that it? Are we going to head sideways to lower over the next couple of weeks just to unwind this overbought situation? We've moved quite a long way away from these 100 and 200-day moving averages as well. So I don't imagine we're going to come back to meet them either. I'm still quite positive on this dollar index. But you've got to be careful and wonder if we haven't just hit a peak for now and maybe ease off into the end of the year before perhaps another run up next year. So I wanted you to be alert of that. Tweezer formation. Yeah, I don't know if that's a tweezer formation. I think, what do they call that now? Cloud something or other. Anyway, I'm not going to try and pretend I know these names for these patterns, these candle formations. I don't. As you know, I haven't bothered to sit down and learn them, but I just know what they mean when I see them. So, okay, so be warned. I've got this in the back of my mind now with all the pairs that I report on every day. I can see quite a few familiar names there in the name of number of the attendees, so I know that some of you are subscribers. So I might as well stick with the dollar then, and let's just have a look and see what we can make of various pairs against the dollar and see if that backs up what I'm seeing on the dollar index, that we might just be a little bit overcooked. This is the euro. I'm gonna try and just have a quick look at the weekly chart first. Let's have a little look. Okay, so there's the weekly chart. This trend line has been important for a while. If you're a Euro subscriber, you know I've been banging on about this longer term trend line. Well, there it is. I probably didn't actually show it in the report, so I can show it to you there. This one is the important one. This goes back to May 2011. So that's exactly when that dollar index started rallying. This is exactly when the more bearish market for the euro started back in 2011, May 2011. We obviously had that dip recovery, and more recently a dip since May of this year, which I remember was triggered by Draghi trying to talk down the euro. Did a great job of it. So we're now looking at this trend line here, which is obviously doing its job. We're managing to hold above it on a weekly closing basis at least, even though we have spiked down to some decent support down here around the 123.80 level. What was last week's low? 123.57. Oh yeah, you'll know if you followed me. I was suggesting buying into longs down at 123.80 with a stop below 123.50. And if you're a euro subscriber, you hopefully will remember that one. That didn't work out too badly. So you know this isn't certainly not a bottoming. There's nothing indicating a bottom here. But as long as we're holding above this trend line, that helps back up what I'm thinking with the dollar index, I guess. Try and move that out. And that's the 4-hour chart. We're not going to pay too much attention to that right now, because while I'm on it, the 4-hour chart for the euro doesn't look particularly positive at all. There's no short-term bottoming pattern at all. We'd have to at least see a double bottom at last week's low at 123.57. We could well do that. We could well test that. That would be useful to see that. That would help back up that theory. That's that longer-term trend line I've got on the 4-hour chart, so you can see we hadn't closed below on a weekly basis, but I've stuck it on the 4-hour chart just so I don't forget it. And the daily chart, there it is again. I've done it in red to remind myself. Again, this candle on Friday, not too negative, potentially indicating a leveling off. I would hardly say that's a buy signal, but that little lower spike to 123.57 and the higher close is at least some way more neutral than negative. And this trend line really is doing its job. Look how nicely. There we go. Open it up so it's nice and clear. Look how nicely it's doing its job. First 3 days of November, we held just above it, and now we are just hovering below it, of course. So we're going to have to really see a couple of days closing above there, just for things to turn a little bit more positive. Stochastics are oversold. I say it all the time. They can stay oversold for a long time. They can stay oversold for a lot longer than I can hold on to my margin in my account trying to be long this pair. So I'm not saying particularly jump in yet, but I've definitely got my eyes peeled for any sort of any further bullish confirmation, short-term bullish confirmation. I think initially all you can say that this would be a correction in the bear trend, nothing more. I'd have to see something far more evident over the next couple of weeks to start calling a low and a stronger rally, something more than just a bear market correction. Anyway, my job is to let you know what I'm thinking, and that is what I'm thinking. So just be careful. It's been a great run down in the euro. We've pretty much run that all the way down. I mean, I've been sticking with that trend for most of it, but now I'm starting to wonder, is that done, at least for this year, or at least for November? Let's have a look at the pound, see if that's telling us anything similar. Should probably start with a weekly chart. Here we go. Sorry about this sliding around. It's the only way I can do it because I can't tile these charts. Okay, so cable, let me just expand this a little bit. Nothing really major. There's a little bit of support around this 158.95 area, but we're hovering below that, so there's nothing really positive that I can see on this chart. We're not holding any important fib support levels, particularly. Wouldn't be surprised if we did test this. This is 61.8 on the longer term chart down at the 157.25 area. So if we continue lower, I would watch that and see if we can get a bounce off there. But other than that, the weekly chart actually does really look quite negative. So there's nothing to say that that could hold at the moment. Yeah, 4-hour chart. I'm on it now, so we'll have an eye. But again, nothing. Even the short-term trend is down over the past 3 or 4 weeks. So 3 weeks, 2 weeks, whatever. So yeah, all pretty negative stuff there. Daily chart. Well, we've got October lows down here at 158.73. I've got 158.66 because that goes back to some other levels further back on the weekly chart. So, okay, that 158.73.63 area is quite important. Again, this candle here not too negative on that must be Friday again. spike lower, the higher close. It's a more neutral candle, shall we say? If we can again just close back above these October lows at 158.73, that would be a little bit more positive. Obviously, very oversold, but it's too early to jump the gun and start talking about a rally in this. But I am. But I'm just wary of a more leveling out, shall we say, and I've got my eyes peeled for anything more positive. That actually doesn't look anywhere near as positive as the euro. I like the fact that the euro is just holding above that trend line on a weekly closing basis. At least there's nothing like that here in cable. But I wouldn't be surprised to see some more sideways action for that at least. Aussie dollar. Aussie dollar. Okay. I'm better just check the weekly chart. Actually, we're looking at the daily chart anyway. I'll look at the weekly chart in a minute. Been quite a decent dump, but this is a very positive candle, as you know, a new low at 85.38, and we then closed above the previous day's high, which was 86.27. We closed at 86.32, so that is nice. It's a key reversal in bullish engulfing. I think I do know the name for that one, eh? I'm pretty sure that's a bullish engulfing candle. So yeah, that is certainly more positive for the Aussie. That was quite up. We'll look at gold in a minute because that was even more positive for gold. So maybe that's something to do with it, Aussie being a commodity currency. Very oversold. Stochastic is actually turning a little bit more positive, if anything. Quite good volume on that big blue candle as well. So that's all pointing to certainly more neutral, if anything, maybe even a bit more positive for the Aussie dollar. Just short term, as I say. I'm only looking for a recovery in a bear trend at this stage. I'm not suggesting we're about to embark on some big bull run. I don't think so. It's just more of a case of it's got a little bit overcooked, perhaps, some of these sell-offs. Weekly chart on the euro, on the Aussie, no, not really showing an awful lot. We would need to try and at least get back above the January low was 86.75. We're not anywhere close to that right now as I speak, 86.36. So we'd need to hopefully see at least a weekly close above there. Now, if I remember the 2013 lows, let me see. Where am I now? I need to scrunch this up a bit, remind myself. Oh, yeah. No, that was it. No, that's the most important level in the short term anyway. The previous low for this year, which was at 86.58 it was in January, and then in October we had 86.41. So we'd need to at least get a weekly close above there to help confirm a more positive outlook for the Aussie dollar. But as I say, probably too risky to be short this one after that candle on Friday. We're very oversold. 4-hour chart again, not showing anything yet. We'd be looking for some sort of double bottom. That would at least help to look a little bit more positive. You're getting a bit of a divergence on the stochastic, but nothing serious. I wouldn't pay attention to that. Back to daily chart, yeah. So let's just see what happens. It's early days, but I'm just warning that we could have had enough on the downside at the moment. Dollar yen. I think this is powered ahead again today, isn't it? Up another 100 ticks or something, 100 pips. It has. So, no, this certainly still looks positive. Weak yen is the big story, has been for a long time. I'm not even going to bother to show you the weekly chart. There are just no levels. It's just powering on. And this one does look too dangerous to start talking about a top at the moment. Daily chart here, so let's scrunch it all up. Okay, I think the important fact here is that this little trend line seems to be doing its job. It's pretty much holding on any correction, and today we've just propelled ourselves off there, 114.61 the low. As you can see, it's just shot straight off that trend line. There isn't, technically wise, there's not an awful lot to go on this. We're in a bull trend that it's difficult to get levels out of this market because it's just so strong. Anyway, I do put levels on my reports every day, of course, as you know, and I think I can spot a couple of dollar yen subscribers in my list there. So yeah, that definitely is not suggesting anything along the lines of top, especially after we've broken through last week's high 115.46, 115.49. That was a potential short term. I thought we might even just go a little bit neutral after that, but no, today we burst through it. Certainly wouldn't want to be trying to pick a top in that one. Canadian dollar. I'll finish up on that one unless anyone else wants me to. Yeah, fib extension targets are always useful. Someone's asking me about them. They are useful. I do use those. They are good for some targets, and they do work from time to time. What am I looking at? Canadian dollar, Canadian. Well, it's in a nice bull trend. It's not quite as powerful, certainly, as that dollar yen. Bit more neutral. Again, this candle, which was on the 5th of November, that spike higher, lower close. You've got to keep an eye out for those. When you do see them, they do have an effect. So look, we've got one here on the 15th of October, that spike higher, lower close, and we did see a little correction. That's more as it was the start of a bull flag pattern, really. So again, that might be what we're going to see here before we break higher again, but not that positive for the dollar Canadian at the moment. Overbought. Stochastics looking a little bit negative. I wouldn't suggest piling into a massive short, but I'm certainly wary that this one's probably going to ease off. And if you get that report, you'll know I've been writing that. Although yesterday it held just above the support level I was looking at. This is the weekly chart. Let me just do something with that. I put some of these levels on there just to remind me where there is some resistance going back historically. So there's one here. What price is that? 114.54. Where did we get to? 115.14. Yeah, so that's one reason why we've hit. That's just previous price action. I put some of these red lines on to remind myself where we've had support and resistance in the past. So that's holding us back for sure. Weekly chart overbought. So yeah, look, I'm not going to bother to go into too many levels for these pairs, but you can see my thinking. Maybe a little bit overdone and a little bit of profit taking, except for the dollar yen. So I'm going to end this little section on gold. So gold's very interesting indeed. As you know, I've been playing it nice and safe, sticking with a bear trend for a long time in gold. I've talked about gold in these webinars a lot, saying stick with the bear trend. And I did think we could get a little bounce around here, around 1181, 1179. We got a little bounce, and then we plunged through it. That was the sell signal. And we did hit one of my targets. 1131 was one of the targets. I didn't expect such a violent bounce. I really didn't expect that at all. I have to be completely honest. I thought we were just going to continue lower. And then we got that huge bounce on Friday. Definitely caught me out. And you can see it there on the 4-hour chart, but I'm going to show you the daily chart, which is where it really counts. I mean, look at that. Bottomed out at 1131, which was a level just from some price action previously, but we got one heck of a bounce, almost $50 up to 1178. So this is all quite interesting, and it's all quite important. Gold was very oversold, so we do need to unwind that oversold stochastic. Maybe we'll only go sideways, maybe we won't go higher, but we got some really good volume there. Having had some big volume down days, we've got a real big volume up day there. It's a huge key reversal candle, huge engulfing pattern candle. Took out 2 days of losses of price action, 3 days actually of price action. Yesterday not so good, but we did hold quite nicely around the 1150 support area, which I had on yesterday's report. Today not looking too bad, hovering. To get a consolidation of price action after such a big move on Friday is not a surprise. You get that all the time before you start to move higher again. But this chart it certainly is too dangerous to be short gold anymore at the moment, and we are looking for a corrective bounce. Really, it does look like it's on the cards, and if you were to buy into longs, well, you can stop out below last week's low at 1130. So it's a relatively low risk reward trade if this is a signal that there are some decent buyers in there at the moment. A short squeeze could easily occur through November, so we've got to be wary of that one. The weekly chart does also not look too negative. There is a slightly bullish pattern there. You can see how this trend line is working quite nicely, and the short-term fibs 1178. Oh yes, this is important. The 1178 1180 level. Actually, I think I've posted my gold report for free on my website yesterday, so everyone can read it. But it's obvious. Early October lows, 1183. That's where we've got to get through now to be more positive. Flicking around to the weekly chart. There it is. Hang on, let's try and make that a little bit clearer. Yeah. So 2013 lows was, this is December gold contract, by the way. December gold contract, just so you know, it's not spot. 1179 was the low in mid 2013. Right at the end, we got a low of 1186. This year's low so far was 1181 in January. We got another little low at 1183. So you can see that whole 1179, 1183, 84 area is all now a lot of resistance, having held there 3 times on the way down. And once we plunged through it, of course, we collapsed quite quickly. So it's a question of, can we get above there on at least a weekly closing basis? If we did, that again would also help to be a little bit more positive in the short term. It's a bit, the outlook is really more neutral than anything else. That big candle on Friday is telling us that there are some buyers in there at those lower levels, and we may not really go down any further. Whether we actually turn around and race up is another question. Even a big positive candle like that on Friday may not mean we're about to embark on some huge bull run. But Doji on the weekly is positive. Yes, exactly right. Someone's just asking me about Doji on the weekly. I was about to come to that. That is also positive. Obviously not as positive as that big engulfing candle that we had on Friday, but even this is nice. You know, the spike lower and then the unchanged close for the week. So that is also, yes, you're right. That Doji is positive. And thanks for pointing out the name because I always forget it. But it's not until we can get above those 2013 lows and previous lows for this year in that 1179, 1183 area that we can start to feel a bit more positive about gold. Swiss bank, yeah, there's this gold thing going on in Switzerland, isn't it? And I haven't followed it. I actually intentionally avoid a lot of fundamentals and news because my job is to provide technicals for banks and people like you. And so if I start reading a lot of news and fundamentals, I'll start getting an opinion and it'll cloud my judgment of the technicals. So I'm aware of something going on there, but I'm definitely the wrong person to speak to. But if anyone wants to fill me in or anyone else knows what's going on with this Switzerland and this gold thing, then please do. But I'm not your man for the job. So yeah, keep an eye on gold. Obviously, if we break below 1130, well, that negates any sort of bullish candle pattern and oversold situation, and we'll just be heading lower again. The bear market is so dominant. The one thing you can't do is fight the trend. So as I say, even if we do start to get some sort of recovery here, it is only a bounce in the bear trend. If this is a longer term bottom, it's not going to turn around in a day. It's gonna wang around for a few days, couple of weeks at least, and create some sort of bottoming pattern. Give us some sort of clue. I just don't see this being something that's going to turn around and just shoot straight up. I'd be very surprised. You can't rule anything out with markets, but I don't really see that happening, in my personal opinion. Right, I've been asked to look at the Euro Swiss, so I'll certainly do that right now. Hold on a second. I haven't looked at this one for a long time, if ever, to be honest. Let's have a look. Euro Swiss. I'm actually going to start with a monthly chart just to give myself a good perspective on it. Okay, that doesn't tell you much, does it? So Euro Swiss been relatively stable on a long term over the last 3 years anyway. There's been ceilings and stuff on that, isn't there? So that's not really a surprise. FTSE cash, yeah, happy to do FTSE cash. Someone's asking me for that. So let's look shorter term on the weekly chart. What can I do with that? Not much. Sorry, bear with me. It's a little bit slow to update this sometimes. The data's excellent, but sometimes a little bit slow. Anyway, well, I'm going to throw some trend lines on here. Not that that's going to help an awful lot because this is just going down at the moment. But we should at least try and get some sort of guidance on it. Let's see what I can find. Okay, that trend line's certainly doing its job. Let's have a look at this one. That's going to hopefully lend some support if we get down a bit lower. There we go. That one's just holding at the moment. Okay. What is that telling us? Be good to get some fibs on here for a bit of perspective too, but I don't suppose they're going to work too well, are they? No, they're not. No, not much point. Okay, so we've got 2012 lows of what we're looking at, I suppose. We had a lot of sideways action through 2012, and we got as low as 119.92. So it looks like that sort of 121.19.90 area is quite important. We're getting close to that now, 120.17. So 2012 lows are definitely worth keeping an eye on. There you go. This is probably worth keeping an eye on. There you go. 120.23. Yeah, that whole 120.23, 119 sort of 90 area looks like it's worth keeping an eye on. Certainly those levels worked for a long time throughout 2012, so I'd keep an eye on that. We're just testing that 120.20 area. We've been as low as 120.17. We've got this little trend line here, which only goes back to this year. So what's this? March, is it? First week of March. So that's worth paying attention to. We are getting some support here, and we are, of course, oversold from those two little lines. That trend line is holding quite perfectly at the moment, 120.18. Yeah, okay, so the 120.25, 120.15 area, shall we say, that there is some support there. That's worth keeping an eye on this week, that's for sure. Can't make much more sense of that, really, so I'm going to just see what the daily chart says. Yeah, oversold, of course. No big surprise there. That doesn't mean an awful lot. Candle patterns and candle formations are not really telling us anything. We're going to have to wait for something a bit more positive, but it's a question of can we hold on to those trend lines that we've seen, really? You certainly wouldn't want to be piling into this on the basis that you hope it will hold those trend lines. You need something a bit more concrete, just being oversold. But if you were short, it's probably worth taking some of the position off a little bit, because we could get a little bit of a bounce back. We'll just have to see what candle formations we get over the next couple of days. We're very oversold. 4-hour chart, nothing there really. It doesn't look positive. The only positive thing I can see is these trend lines on the weekly chart. The trend line on the weekly chart, and then this resistance and support area that we got back from 2012. That's the only hope I can offer to any bulls at the moment. And bearing in mind how oversold we are, I guess there is a reasonable reason for looking for at least a leveling out. Maybe not anything more than a leveling out at the moment. But yeah, no, even longer term, I can't really see anything. Okay. So it is just a case of, oh, hang on. Let me get that back. It's a case of trend lines. There's nothing else I can point to on this chart, really. Sorry, I shouldn't have shrunk that so much. So, the key to it is this band, yeah. The 125, 120.25, 2015 area, And if we don't hold above that trend line, then the risk is that we test the 119, sort of 95, 90 area down there and see if that holds. Below there, then we're looking at this trend line here. So yeah, it's a bit wishy-washy. There's not really an awful lot to go on there. The Swiss bank said they would intervene and buy at 120. Well, there you go. These banks do look at technicals. They don't just pick a number out of the air and go, hey, let's give that one a go. They look at areas where they reckon there's already going to be support, and that will lend itself to what they're doing. So if that's what they're saying, there's a peg on at 120. Okay, thank you. I wasn't totally unaware of that. I can see why they would want to do that. That's exactly where I would be trying to hold the currency up if that was my job. I'd certainly be looking at that as a place I'd be trying it on. So yeah, that ties in with what I'm looking at, and you can see exactly why I would say that. And I'm sure they're looking at exactly the same thing as I am. I'm aware that central banks do actually go to analysts who do what I do. They wouldn't come to me, of course, but they would go to the big banks and ask them for their opinion. I know they do because I know someone that they go to and ask them for that sort of information. So there you go. Yeah, they do sit around desks with people who are probably even better than I am and ask them for their opinion. Great. Well, thank you. I hope that helps. That's quite interesting, actually, that they're going to do that around 120. DAX and FTSE. Yeah, sure. I've been asked for the DAX. I've been asked for the FTSE. So let me... I don't actually do FTSE cash. If you don't mind, I'm just going to do the futures, just because that's what I do every day. So rather than trying to break down a whole new chart, I might as well just stick with what I've got. Otherwise, it's going to take a bit longer. And I'll let you figure out what the futures cash spread is. Probably not too much at the moment. So DEC futures, these stock markets are, to put it politely, not easy at the moment. Not at all. I'm very happy with myself because I spotted that dump in the early summer. Then I felt all cocky because I spotted the dump here that we had sort of end of September, beginning of October. I even called a low for that move, but then it all went to pieces for me. I thought this was a bounce in a bear trend. And to be fair, in the European stock markets, it still does look like that. But I'm completely confused now because the US stock markets have broken to new all-time highs, or at least the S&P and the Dow Jones have. The Russell and the Nasdaq is yet to do so. They're really, really just hovering in a range. So, yeah, I'm completely confused. You've got two stock markets in the US just ranging, getting nowhere near their previous highs. In fact, I'm going to run through all the stock markets now and show you what I think and why I'm completely confused. You've got E-mini S&P, as I speak, hitting new all-time highs today. Probably the same for the Dow Jones. Yeah, 17,604, I think. So what do? Well, looking at the European markets on their own, they really don't look that good. This does look like a bounce in a bear trend. The FTSE, okay, is just holding above this trend line, so that's slightly positive, but really not a great recovery, and I don't feel particularly positive on these markets. Anyway, it did get very oversold and we've managed to bounce. Okay, so the weekly chart doesn't really say an awful lot more than that at the moment. We may be waiting to break the high in Europe when QE in Euro is announced. Yeah, possibly. Weekly trend line on FTSE has gained this again. Yeah, we are above that trend line, so that is the only positive I can see for the FTSE at the moment. Yeah, maybe we are waiting for QE, but QE the US QE has pushed everything higher. So anyway, so FTSE for me, the big issue is, let's throw some fibs on this. I do love a fib, so let's put this on here like that. There you go. Well, we're through the 61.8 to 65.75. We hovered there just last week, but we're through there this week. So now the question is 100 and 200-day moving averages, 66.35, 66.60. If you get my FTSE report, you'll know I'm suggesting a short up round there. I just don't feel that confident. We're very overbought. We have been for a couple of weeks. Well, no big deal, but that doesn't add to the positive positivity that much. It's just a question of, I think the important thing is now watch the 100 and 200 day moving averages. We're edging slowly, very slowly towards them. And if we manage to get a day or two close above there, well, yeah, that would be a bit more positive. It's going to take probably a little bit more than that to convince me. I don't know. It's a confusing picture, and it just doesn't look that good to me. I think we're being held up by the US. I think if it wasn't for the fact that S&P and Dow Jones are so strong, we would be in a bear trend. And I just don't know what to say at the moment with the FTSE. I think that's all you can do. See what happens at these 100 and 200 day moving averages and see if it manages to hold. I mean, it's easy to stick some trend lines on here and see if, easy to stick some trend lines on here, of course. I'm going to take it from there. There you go. That would be a trend line to watch to see if we can maintain this 3-week bull trend that we've got there. And if we can't break through the moving averages, and then we start breaking below that trend line, getting back below 65.74, that's 61.8. Of course, that's going to start adding a bit of pressure. Stochastics will start looking a bit more negative. Maybe we'll get a spike down on high volume or something. But right now, it's just we're edging higher towards moving average resistance. I can't really say any more than that at the moment. DAX is also a little bit tricky. I'm going to show it to you. Japan QE may have something to do with it. Yeah, it does. You're right. Japan QE does have something to do with it because it was, of course, Japan QE that caused a big spike higher overnight and caught loads of people out. Me included, to be fair with you. I didn't see that coming, of course. It's just something that happened. DAX, that kind of picture does look similar, doesn't it, to the FTSE chart, the daily chart for the DAX. We've managed to finally get above the 61.8, but I mean, it was quite a battle. It took 4 days before we actually got through it, and even when we did, we hit the 100-day moving average and collapsed. Now we're trying to claw our way back up to that 100-day moving average. So let's see what happens there. Even if we get through there, we've got 200-day moving average at 95.07. So we've got quite a few obstacles here, and we are finding it a real struggle to get through them. Well, hardly surprising when we're that overbought, but I just don't like the longer-term picture anyway for the European stock markets. And as you know, if you subscribe to the DAX, I've written on there for a few days now that this is really just being held up almost artificially in a way by the US. I don't think this German market really wants to go higher. It's certainly not doesn't look very convincing, does it? This is the 4-hour chart, which I'm not going to bother with too much. It's a bit too short term. You can see we're just trending higher in that little channel. But I'm not going to do very short term stuff here today. Let me squeeze these up a bit more. Okay, so there's the weekly chart. Now that's a bit messy because I've got all sorts of lines on here, but you can see that these red lines are doing their job. 94.41-ish area. What do we get? 94.69 last week was the high. So that mid 94.50 area is a problem just based on previous price action. And it also coincides with kind of with that 100-day moving average. I think it's around the 94.20 something area off the top of my head. Yeah, if it was this alone, I'd say it doesn't look very good. Pattern-wise, it's also slightly confusing. I did think this was a head and shoulders pattern, and it still kind of looks like a head and shoulders pattern. Left shoulder head, right shoulder, break of the neckline, but then we've spiked back up above it. Now, it doesn't mean to say that this won't develop. That can't become a bearish trend. It can. We start peaking here and start heading lower. Of course, well, we've got three peaks, consecutively lower peaks. We've got 2 troughs which are lower, so that this could still develop into a bear trend. And this is always my theory. I wrote in big block capital letters on my reports that this is a bounce in a bear trend. This is not the start of a new bull leg higher, but I've been proved right in some cases, like the DAX and FTSE, and completely wrong in the S&P and Dow Jones. So I don't know who wins. Is it the States or is it Europe? I think a bit of profit taking in the US would send these European markets significantly lower, but time will tell. I'm wondering, is this the start of a bear trend? I really think it probably is, and it's just the US that's totally confusing me. I do still think this could be a head and shoulders pattern. Maybe an initial false break below the neckline, which was actually here, and we've recovered. But there's nothing to say we can't get back below that neckline and then plunge again. If we were to close below the 100-week moving average, which is 88.44, then of course that would certainly add some pressure and signal that this is a developing bear trend. So yeah, Europe on its own doesn't look good. I'm not positive on that, but I'm totally confused by the fact that the US looks so strong. What else do we want to look at? Well, if you want me to look at some more stock markets while we're on it, how long we got? Oof, not too much time. I'm talking as quick as I can. This is the... I'm going to just show you the weekly chart for the Russell. I'm not going to bother with anything shorter term. There you go. Double top, big double top here. We've been banging on about that one all year pretty much. 12.12, 12.10, 12.11. So that is a big double top pattern there. We've had one heck of a run last year in this Russell. And I'm really surprised at how much it's bounced. So the question is, September high, 1187, 1188. Can we get through there? We're just starting to get a little bit high today. 1182, we've got nearly as far as, I think I had a stop in at 1183 for shorts at the 1179.80 area, something like that. Okay, so if we push through there, it's a question of can we get through the September highs, and if we do, then we can test this double top. That's it, really. I mean, on the grand scale of things, this has just been in a range all year, hasn't it, really? We blipped below the range in October. We quickly recovered, so we're heading up towards the upper end of the range. You know, you can't really say any more than that, can you? We'll go to Nasdaq. In the weekly chart, yeah, this does look a bit more positive. The only thing that we've got to look for, or the only thing that bulls have got to watch for, is this trend line, which is being tested now, and you know that could easily just hold the whole thing back. We have broken high, we have beaten SEP highs, but we're going to have to convincingly get through this trend line. Of course, markets do just hover below trend lines and just keep going, edging up slowly. That's certainly something that could happen, and it's starting to at the moment. You know, you could see by the end of November we're here. We've just edged slowly along that, underneath that trend line, and there's every chance that that could happen. It doesn't mean just that we don't, just because we don't get through the trend line, that we suddenly turn around and dump. That does not necessarily have to happen. And then, well, I'll show you the E-mini Dow Jones, but there's not really a lot of point because it's just breaking to new all-time highs every day. So you can't fight that trend. Something's got to give. Either Europe's going to play catch-up, or America's finally going to run out of steam. I must admit, I never would have guessed that these US stock markets would be up here now. But there you go. They are. Anything else I can do? Well, we've got another couple of minutes. Anyone else got a currency pair or another market they want me to look at? Energy, oil, anything like that? Nat gas. I can do grains. I do grains. I do a lot of grains. Euro GBP. If anyone wants to, I'll do Euro GBP actually. WTI. Okay. I'll quickly look at the Euro GBP. There's actually probably not much to say. This has been in a negative trend for quite a long time. I've just started covering this pair. Nothing on the week. Actually, I'm not even going to bother if you don't want to see it. But just be aware that 2012 lows are at 77.53, and we got as far as 77.58 this year. So we're holding above last year's low. Maybe that's going to be some humongous double bottom pattern. WTI. I'll finish on that one. Gold. I've done gold. Sorry. Is there a charting package or platform? Yeah, there is. Bloomberg or CQG. They're both not cheap, and I don't use them because I don't need all the other bits, the bells and whistles that go on with them. But CQG, I think, is pretty much industry standard for my friends at Marex and Tower Trading and those sort of professional traders there. Bloomberg I used to use quite a lot. It's a great charting platform, but it's expensive just for a charting platform. The banks use it because they're easy to communicate with each other on there, and I used to talk to the banks through that, but I don't need to pay for that anymore. Okay, so oil. It's quite interesting. I can tell you that there's some good support around 7,400. I'm not going to bore you with the reasons why right now because I'm running out of time. But there is some good support around 7400. So we seem to be holding just above there now. 75.84 is as low as we've got. We're so oversold on the weekly chart. We've obviously had this enormous dump. I'm wondering whether 7,400 we haven't hit it yet, but I'm wondering if we've got close enough for things to stabilise. That chart at the moment on the weekly chart, there is nothing positive about that at all, except the fact that we're massively oversold, but we have been for a while. So there is nothing to tell me there that this is about to suddenly turn around and reverse just because we're oversold. The daily chart, I still think this could go lower. Obviously, we've got to watch November lows at 75.84. So will we get a double bottom there, or something to tell me there is some sort of short-term low in there? Nothing is saying that as yet, but I'm not that negative, and I have been negative on oil for a while. Same as gold. It's just been a case of sticking with the trend, and I know that some of the subscribers have been quite happy with it, but I'm not quite so negative now. I'm wary of us having some sort of short-term bottom at 70, above 74.00. You can see that this little trend line is doing its job nicely. We are really just going sideways for the last few days. I put that on Twitter, and someone asked me back saying we're not going sideways at all. Well, how is that not sideways over the last 4 or 5 days? Looks pretty sideways to me. So yesterday, we managed to get 79.85. So we couldn't hold above that trend line. We couldn't get back above these lows here. What are these lows? 79.55, 79.44, 79.78. So that whole 79.45, 75 area is obviously strong resistance. We got as far as 79.85 yesterday and dumped again. So it doesn't look that positive. Obviously, we're going to have to get at least a close above this trend line, which we haven't managed to get. We've just managed to spike above it. At the moment, it looks like we're heading lower. Probably a retest of last week's low at 75.84. Yes, I wouldn't be surprised to see us go lower again, but around that 74.00 area is quite good support. And I have been putting that on my reports for quite a long time now. That is in the back of my mind, and I'm wondering if that will offer some support and we get some sort of spike off that kind of area. I don't think that's the exact price, but I'm just letting you know to have a look at your charts and see if you can find some support around that 74.00 area, because I've got a feeling we are going to level off. I mean, this also, maybe that's because I've got this dollar thing in the back of my mind, that the dollar's maybe just run a little bit too far. Gold maybe run a little bit too far. And oil, even before Friday, I was already thinking this really isn't looking like it's going to plunge any further. And I'm looking for reasons to at least be more neutral on oil, maybe not yet positive on it, but I'm definitely looking for reasons to be more neutral. I'm looking for the evidence. It's not quite there yet, but as you know, if you subscribe to oil, I have been talking about potential low for the week around 74.00. So we'll have to see if it gets there and if it tests it. Then we'll know. I think I have to finish now because it's nearly 10:02 and I'm only supposed to have 45 minutes, but until I get told to stop, if there's anything else you want me to have a look at, I'll happily give it a go. Any currencies or anything. Stock markets are high. Shouldn't oil be 2? I don't know about that. I don't think there's particular correlation between stock markets and oil, other than when oil goes down, of course, it's less money coming out of people's pockets, which is quite positive, but I don't think that has necessarily been the driver for strong stock markets this year. I'm not the man to comment on that, to be fair. Okay, thanks very much, and thank you for your thank yous. I think you already know what my website is, so I'll just tell you there. You're probably aware that I do post free reports. Hang on. All participants, where am I? All attendees, there we go. I'm sure you know my website. And I'm sure you know my Twitter handle, @DayTradeSignals. Oh, great, it's been recorded. That's super. I've also recorded it myself, actually, which I shall stop right now. Thank you, and I'll give you my email address as well, just in case if I can help anyone at all. Thank you.